Good morning. I'm Vince Lanti. It's Monday morning, 7:59 in the AM, and this is the GoldFix Market Rundown. Today, we're going to be talking about the front and center story that was just emailed out. Silver has room to run. Those are UBS's words, not ours. Well, they're ours as well. We sent out a report this morning. They've raised their target to $42 from 38, which is it's kind of a whopping raise to 10.5%. But they expect it to get there by September. So that's pretty bold. December at the latest is what their expectations are. We're going to go through that in a second. Let's start with the markets. 10-year yields are up one at 440. The dollar is 98.18, up 52, pretty strong. S&P 500 is 6,400, up 7. The VIX is 1523, up 31. Gold is 33.37, up a quarter of a dollar. Silver 38.13, down a penny. Copper is 5.73, up 2/10 of a cent. WTI 67.27, up a buck and a quarter. Natural gas 309, unchanged. Bitcoin 118 spot 80, 800, down 700. Ethereum strong again on its way to 4,000, it would seem. 38.75. Platinum, palladium leading the charge on the metal side. Palladium catching up to platinum, 12.42, up 26. Platinum 14.11, up 11. Gold, silver, unchanged bid, and grains are all down about 40 basis points on average. Okay, so we'll go right to the main story. Oh, let's talk quickly about the prices. European trade deal. Trump basically eviscerated Europe, or at least eviscerated Europe's public leadership in doing so. And that's one of the reasons the dollar is stronger, right? So, well, without getting into the minutiae of it, it's good for the dollar. It's bad for the euro. That's what's, I think, down today. That's the first thing. The second thing is you would think that would be bearish for gold, and it is not bullish for gold. But I believe the behavior we had the last couple of days leading into the weekend were probably anticipation of this happening. You remember there was a Financial Times Friday story at around noon after everyone had sold that they were on track for a deal. Okay, so that's probably why gold hasn't sold off again. Now, you should expect it to sell off. You know, there's always going to be more people that sell it when this news comes out, but it's a sell the rumor, buy the news. So you would cover your shorts here on the news, and then you'd see what happens. Silver has been very strong relative to gold lately, and that's because there are major players for the past month or two that have been unwinding short silver, long gold, and maybe short silver, long copper, but the gold silver has been unwound very sexily, very steadily by very big money. And they're doing that in anticipation of a global boost to the economy. So as the tariff situation thaws or gets resolved, depending on how you look at it, industrial metals will go up, right? Also, it doesn't hurt that copper's got a 50% tariff in the works, and that kicks silver higher. And, you know, silver's a critical mineral. We're not going to admit that, but it is. And then on the other, staying with that theme for similar but not the same reasons, platinum spikes above 1,000. Now it's at 1,400. Palladium says, well, I'm kind of worth something too, and starts to catch up. All the metals are just rising to catch up with the new floor that gold has set for them. So the old correlations are neo-Keynesian. Dollars to gold, dollars to this. The dollar dictated commodity prices as a correlation. Now commodity prices are being dictated to themselves. Like there's news of a sovereign wealth fund. I think it's Azerbaijan, I'm not sure, but they're the one that we hear about. But sovereign wealth funds are buying precious metals too now. But they're oil sovereign wealth funds. So if you make money selling oil, what do you do with the silver? What do you do with the silver? What do you do with the oil money? Well, you buy gold with it. You're not buying dollars with it. The petro dollar in many countries is now combined with a petro gold, a gold, however you want to say it. But oil and gold are going to correlate more. So I'm waiting for gold to drag oil up. And if it doesn't go up, there's other things going on there. But look, if I'm a foreign country and I sell oil and I make money from that oil and I'm not putting as much money in treasuries, well, guess where that money's going? It's going into gold or the yuan or both. Okay, let's read the story here. So on Friday, after the 80-cent drubbing, UBS raised their silver target to $42. Now, we added a voice note to that as well. So UBS says silver has room to run a bit higher. Silver has been one of the strongest assets in 2025, rising 34% year to date and nearly 8% in July alone. I think it's the strongest asset, period. I have to check my own writing there. Being too careful. Renewed investment flows, softening dollar conditions, and tariff-induced buying pressures have pushed prices higher, with momentum now prompting institutional upgrades. The bank, UBS, just raised its silver price forecast from $38 to $42 per year across all tenors through mid-26. The revision reflects a constructive stance on investment and industrial demand, as well as that pullbacks towards 37 and a quarter represent renewed buying opportunities. We break that report down, adding important context of their prior work that also adds weight to their call. Remember, they're saying buy the dip. Some of the topics we discussed in that report, or in our analysis of that report, is UBS's recent track record. That's the context. Their thesis about the investment flow driving price now, which makes sense. It's industrial. Where the demand is coming from, the structural deficit. We all know the structural deficit thing, but it has to be said. U.S. dollar weakness anchors the bull case, and that U.S. dollar weakness is not going away. Silver joins the institutional rotation. That's a nod to something that we've been saying, that macro discretionary is looking at silver now. And then the voice note is, we say this report, which we cover in detail, is steak, not sizzle. And that whole analysis is in UBS raises the target to $42 with the voice note. Next, over the weekend posts, UBS started the weekend raising price targets for platinum. They're not in love with platinum. They just say that it's tight and it may stay that way for a little bit longer. And we put up a post by Ronnie Stoeferl of In Gold We Trust, Incrementum. Gold's next 5 years could be history repeating itself in a big way. And that's a pretty good piece. Well, really good piece, because it talks about the analogy with the 70s, but not in the way that you're used to with the inflation. It talks about the relationship of the metals with other assets. Founders, the U.S. race to dominate AI. Stable coins will break something. So what if they do? That's some analysis that we read, some analysis that we made, and some opinions that we have. And then on Sunday, we posted special yield curve control primer and HeartNet walkthrough. So the HeartNet walkthrough was embedded in that. You're going to start seeing, I believe, you're going to start seeing more talk about money supply, M1 and M2. We'll talk about those when it needs to be. Financial repression will come up, and yield curve control. So all those things are going to come up in topic form or macroeconomic narrative going forward. And that's because the dollar is weak and we're going to be creating more debt. And so people are now looking strongly or closely towards the dollar relationship with rates. See, rates are still high and the dollar is weaker. And it's kind of like the gold story repeating itself. Anyway, that primer will get you through yield curve control in a way that you can understand it, as well as with a little academic backing there. And it'll prepare you for the narratives coming out soon. Data on deck, a big week, Fed week, employment, and PCE, Fed week. So Wednesday, 2 p.m., the Fed interest rate decision. People are talking about 2 and 3 rate cuts for the year. Well, they're running out of room. So we need a rate cut. We don't need a rate cut, but if you're going to get a rate cut and you have a stock market that's betting on 2 or 3 rate cuts, you probably want one now, you know? So it could be pretty pivotal if he doesn't cut. I'm not sure. PCE index is in June, and August is non-farm payrolls unemployment report. A quick look at the charts. No, let's leave that up there. We're in the middle of the range. Okay, it's this was a painful move for me because I bought this, and I'm out. I literally sold it on Friday. So that's it. We're in a range. It's not a bad range. We were in a range from December to February, from December 23 to February 24, and it was worse than this before we catapulted higher. So this started out looking to me unprofessionally like a distribution type of top, but it's not. It's a consolidation. And you can thank silver for that. You can thank silver for that. This nonsense. I think it's nonsense. I'm long silver, and it started with a trade that I put on here, added to it here, and I'm comfortable. I don't start to get worried until we get to 37. I don't start to look at it with fear until we get to 37. And I'm really not that worried until we get to the bottom of the 36 range. So I'm kind of in the UBS mindset. It's a longer term trade for me now. It's a short term trade that's become something that I'm comfortable staying with, especially with the reflation trade. That's it. I'm Vince. Have a great day.